Good afternoon, everyone. Welcome to the Block and Key knowledge series presented by Liminal and Dolce Vita Advisors. Thank you so much for taking the time out today to come and hear all of these wonderful people from the industry. Before we jump into the webinar, I'd just like to give a little bit of a background as to why we've curated these series of webinars, discussions, all sorts of interactive conversations, basically. Whenever it comes to digital assets, we've primarily seen that there are always a lot of mental blocks. There are very different and very polarized opinions that you will hear about crypto assets. One set of audiences will always say this is the future. This is going to be the asset of the future. It has to be part of your portfolio, so on and so forth. And then there is another side that says this is nothing, and it's actually something. It's vaporware, it's rat poison, it's so on and so forth, right? So how do investors today, or how do people today try to make sense of this new asset class, and what is the best way to really make that informed decision, to make that informed choice? So our part to play over here is to try and get the best in the business together, and to try and spread some awareness around this. The idea behind these webinars is going to be that we'll have a lot of these people come in, talk to you about their various domain expertise, and then towards the end of the webinar, we will try and provide everybody with an opportunity to also ask their questions. So please make the most of that opportunity, so that we can also understand from you as to what are the kind of topics or the subjects or those nuances that we need to sort of discuss a lot more and try and help you with more information around. On that note, pleased to announce the launch of Block and Key. Our first guest for today is Krishna Hegde. Krishna comes with an extensive experience of over 20 years. Uh, I'll just quickly bring in all the participants, Krishna, and then we'll give all of you some time to quickly introduce yourselves. Our second guest today is Rajesh from Deloitte. Can we have Rajesh on board? Yes. Hi, Rajesh. Our third guest today is Samir, and of course Sumit from Dolce Vita Advisors. Hi, Sumit.
Hi, how are you? Hello, everyone.
Very well. Hello. Uh, Samir, can we bring on Samir as well? In the meantime, Krishna, why don't you please take a quick 2 minutes to introduce yourself?
Sure. Thanks, Manar, and happy to be here. I think this is a great platform for people to understand what's happening in the crypto ecosystem and how to think about crypto as an asset class. My name is Krishna Hegde. I've been in the financial services industry for about 20 years now, and my background has been more in banking. I spent about 10 years in investment banking effectively on the sell side. I used to run credit research for Asia Pacific for Barclays in Singapore. This was till 2016. The last 7 years, I've been more on the building side. I've been building in fintech in India, with the last 3 years being in the crypto space. I'm co-founder of a company called Brown Rice Capital. Brown Rice Capital is the premier platform for Indian HNIs to invest in crypto. We help HNIs to understand the asset class, make choices in terms of what to buy, when to buy, how to buy, enable them to get the liquidity, and then execute the transactions. So we are essentially an end-to-end platform, which also handles compliance. And this is something which we thought was a gap in the market based upon the inbound inquiries we saw from a lot of family offices and high net worth individuals. And we're here to serve that audience. Thanks, Manar, for having me here.
Awesome. Thank you so much, Krishna. Sumit, quick round of introduction for you and Dolce Vita as well.
Sure. So, hi, everyone, and thanks, Manhar, to have us here. And I guess it's great to be on a platform and see how we can educate everyone with, I would specifically use the word taboo, still that the currency, or what do we call, say some people don't even consider crypto as a currency as of yet, or digital assets, though our government has been kind enough to tax it and give it a positive boost after the Supreme Court judgment and the recent RBI circulars and the keynote by the deputy governor. But still it has it is issues. So here we are educating or trying to educate everyone and create awareness about the industry and the crypto platforms and the crypto nuances itself. I'm Sumit Kochar. I'm managing partner with Dolce Vita Advisors. We are based out of India and UAE and trying to expand as much as possible. We are lawyers. We have partners, those who are MBAs and chartered accountants as well. We are engaged in advisory in terms of legal and commercial business strategies, setting up funds, and being a full service law firm as well, creating and setting up family office entities also. And we have been advising crypto investors and traders for quite some time now, and it's an interesting space to be. And that's what we have been experiencing in UAE markets as well, as to how the space is increasing and getting traction day by day, with regulators you know assessing the need of the hour of regulating these aspects also of the industry and issuing licenses and make it a universal aspect as to how these regulations will change the way, as in we are able to use freedom. It is indeed, the currency is indeed a part of freedom, and so it should be understood and regulated in order to gain more traction, though there have been very turbulence in the industry last year. But still, as I could see from a wealth report of Standard Chartered in 2022, the traction and the momentum has still not stopped, and I guess it is here to stay and will go on in future as well.
Absolutely, Sumit. So, see, those are the gaps that we are also trying to address. I think we've had multiple engagements with various government stakeholders, as part of the industry participants. And one thing that we've noticed, and is probably a pertinent point to say at this stage of the conversation, is that we've come a long way with the regulators, with the stakeholders, the policymakers also. There was a point of time where they were completely clueless about this new technology, and it was very grossly misunderstood, if I can say that.
Exactly.
To today, where the kind of questions that come to us from policymakers, from the powers to be, are super articulated and very very nuanced. So they really truly understand the technology a lot more, and therefore that is reflected in the kind of sort of communications that you hear also. I mean, today I was reading, and there was a mention about the G20, and how India wants to take a nuanced stand. And there was a meeting that happened, I think, in Brazil. I'm not sure, in one of these countries that was a part of the post G20 conversations. And again, everyone's talking about how can we make that international cooperation happen and create, these frameworks that can work in a global scale. Hi,
I'm
hi.
there, Rajnish. Hi, Manoj.
Hello, so glad to have you. So sorry you're facing some technology challenges. I think in true, tradition of webinars, here is our technical glitch as well. But thankfully we've come across it. Rajesh, quick 2 minute introduction for you as well.
Yeah. So first of all, to be fair to you, I think this is more to do with some bandwidth issue. So I could log in from my mobile and not my laptop. So tech is fine from your side. Quick introduction from my side. I'm a partner with Deloitte. Have been here for about 25 years, including 3 years in our New York office. I largely focus on financial services and asset management, lead the asset management tax. So do work around fintech on offshore domestic funds, AIFs, and the ecosystem around that. So pleasure to be connected on this call and happy to speak more on the taxation side.
Awesome. So While all of you are here, I'm sure tax is one of the biggest concerns. So, Rajesh and we have a small surprise for you guys. He's been gracious enough to put together a small deck that actually covers the nuances of taxation when it comes to digital assets. We'll quickly try and wrap up the panel. We'll spend some time on his deck, and then we can follow that up with a Q&A so that you guys can get maximum out of this conversation.
Hi, everyone. I'm part of the Deloitte M&A tax and regulatory team, largely focus on the FS sector, including digital assets and related nuances on some of the aspects of licenses or structures around those. So these are some of the areas which me and Rajesh work together in Deloitte. So happy to be part of this discussion.
Awesome. Thank you so much, Samir. Thank you so much for being a part of this.
Thank you.
Okay, so let's dive right in. I think we've tried to sort of make this a little more interesting, and rather than trying to talk about what's happening today, we're going to go slightly ahead into the future and then come back to how the things are today. So, with that, or on that note, Krishna, what do you think is the future of digital assets like Bitcoin and Ethereum? Right? What are the future prospects from your vantage point? What do you see? What's happening in the world? ETFs are coming. So please enlighten us on what do you think seems to be the future of these interesting new technology paradigms.
Sure. So, Manoj, I think the way we look at digital assets is that the word itself is a catch-all for a variety of underlying assets. You have assets like crypto, which are where the value is determined cryptographically. There's a bunch of assets whose value is tied to a different reference asset, like stable coins, which are also part of the digital assets realm. And then you've got this whole field of tokenization, which is just starting to pick up, wherein you've got variety of assets ranging from real estate to underlying venture capital, LP interests, bonds, etc., all of which are also coming onto the blockchain and becoming digital assets. So to us, digital assets spans a very large spectrum, and what we've seen so far is just the beginning of the story in some sense, which is through crypto. And at this point of time, the investable digital asset clearly is crypto, which is where all the focus is and where all the investor attention is. And as we emerged from the crypto winter, wherein we had seen prices drop dramatically and interest levels decrease, I think what is becoming very clear to the investor base, and when I say investor base, we typically talk to HNIs, ultra high net worth individuals, and family offices in India. What we are seeing is that interest levels have started picking up because what people realize is that these assets are resilient. They have been battle tested. They've been through multiple cycles now. This is not the first bear market for many of these assets. And just the fact that they've been resilient and have still been able to continue to gain attention and investor interest is a testament to the fact that these are here to stay. Further,
So,
people look at them. Sorry, go
sorry.
ahead.
So the history says that there's a bright future up ahead. Sorry to
Yes, I think
interject.
the fact that the fact that they've been resilient is helping in terms of future ahead. The size itself is focusing attention. So if you look at the crypto segment right now, has a market cap of $2.2 trillion. If you put that in context, right, NSE, all the companies put together, large cap, mid cap, small cap, everything put together, is in the $5 trillion, $5.5 trillion range, right? So what you're seeing is that just the crypto assets at this point of time are more than a third of the NSE in market cap. So the way our investors and customers are thinking about this is saying that look, if the asset class is so big, I need to be able to have some kind of a view on this because if you're not having a view, by default you're underweight, right? That's the nature of the investing game. So how do you dabble in this? How do you start taking exposure? Is what people are starting to think. And from a prospect perspective, the point you made about the Bitcoin spot ETFs being approved, in early January, that's definitely been a big positive factor for a lot of people we speak to because earlier crypto was seen as a fringe asset, right? So there are a bunch of people who are investing in crypto. They may not necessarily be mainstream. The large financial institutions are still not supporting crypto. We don't know what happens, was the refrain from a lot of people. Now, once you see BlackRock and Fidelity and all these names, which are recognized global institutions, introduce Bitcoin ETFs, the confidence of the investors has increased dramatically. Like just last week, my colleague was in Delhi talking to a family office where the patriarch, who is in the 70s, said that hey, if BlackRock has got an ETF going for Bitcoin, there must be something which is interesting here, right? So I think the Bitcoin ETF has done more for the crypto interest levels than any other development which happened in the last few months. And going forward, I think there are multiple milestones which are there on the anvil, which will further increase interest into the crypto ecosystem. Regulation obviously is one part of it. As regulations become clearer, people are going to get more interested. And over a period of time, what we are seeing is that the future is super bright, obviously, and that's the reason we are all building in the crypto space. We are seeing investor interest within India also start to pick up. And I think as the Bitcoin prices increase, like what we see in the last few weeks and months, right, that in itself brings in further interest because once you see prices picking up, price action gets people interested like nothing else, right? We've seen that through multiple cycles, and that's definitely happening right now.
Sure. Okay, so I'm going to pick up on one thing that you mentioned as one of the hurdles, right, which was the regulatory clarity. And with that, Sumit, what is your take on? I think in your introduction also you mentioned something around, how regulations and how
Yeah.
all of these things are shaping up. There seems to be some positivity there. So, how do you see that playing out? Because you speak to clients on a regular basis. What do you hear?
See, though I'll still say, and I won't shy away from using the word taboo for family offices or general investors because everyone is fearing of taxation or AML and KYC issues when they buy this, which the government, by levying the taxation aspect presently and the recent changes in the budget, wherein they are putting in TDS, GST, and the aspects pertaining to know your customer and ensuring that you need to have the proper documentation is in a way positive, but though they have their own challenges in relation to creating an ecosystem wherein they have people to monitor, while there are other issues with respect to payment gateways and coinciding it with the license aspects, wherein we don't have licensing here as of yet, but at least the government started recognizing it since 2013. And the Supreme Court judgment was a big boost to the country, wherein there are huge wealth being held here in crypto, and they are the taxation measures were key for from the government, wherein they were taxing the digital assets to gain some legality for the cryptocurrencies and those investors, because they understood that this will be a huge loss on the hindsight, that they can create huge revenue for the government by taxing and regulating them. So they were working, though the bill was put on a hold, which was there was an apprehension, or say with the apprehension there was a positivity, or people were thinking that there will be some nuances to it and the bill will be a positive move by the government, and
Right.
the official digital currency coinciding by the RBI, just like USDT, will come up, and it will be a positive move. And these things like establishing regulations or official digital currencies, and what they want is they want to prohibit private currencies in order to gain control. And as 2022 deputy governor's speech clearly said, that it must not harm the financial system and ecosystem and economy of the country. If it is not, they don't have problem, but the DLT aspect of it is indeed harming, or because of the underlying issues pertaining to, they don't have bandwidth to license, or they don't have the bandwidth in order to regulate the entire industry, which is borderless. Due to
Right.
the main borderless aspect, it is creating issues. Otherwise, since they have taxed it, and the Supreme Court has also shown that it will cause huge loss,
Hmm.
so it will be beneficial. And the introduction of the bill and other workings by the government is indeed helping, and there should be enhanced market confidence, mitigation of terror financing should also be there, and money laundering risks. And there should be proper, RBI circulars should be there in order to help the industry, like liminal, I guess, helped the CBI
CBI.
only to help with the custody of the digital assets. So that is how government should show confidence in institutions like yours and help them take them on board in order to advise them and take that bandwidth and help create an ecosystem from professionals like us, those
Right.
who by learning on the job only are helping the clients and other industry intermediaries and take it to next level by regulating this unregulated market in India till date.
Right. Right, right. Thank you for that. I think Sumit, one interesting, like a couple of interesting things that come to mind listening to you. So one is look at the contrast, right? You work out of Middle East as well as India. On the regulatory front, on the one side you have Middle East that is now licensing WASPs being virtual asset service providers or cryptocurrency providers, and they have full-fledged frameworks in place for how you have to do your compliance, your regulation, your AML, your taxation, your audits, your everything. Your technology frameworks have to be robust. What are you doing for backups? What are you doing for redundancies? So they are going into all of those details, right? um, so that I think is also one more catalyst that has sort of, and I think one thing that India has done very well was not take a decision, right? A lot of times not taking a decision is also a decision. It's a good choice. So they've sort of decided to wait. You correctly mentioned the whole capitals, the money going in and out of the country, right? So PMLA, we are a capital control economy. We have very different considerations as a country. We have to ensure whatever money is going out, whatever is coming in, is monitored, is regulated in that sense. And this sort of completely transcends that, right? So I think a couple of things that Indian regulators have done very well. A, they've not taken any sort of harsh action. I'm glad that bill did not come in. They waited. The second good thing that they did was to try and talk about global cooperation, right? And then they took the lead with G20, and that I think was a very definitive stance. And slowly we are seeing, India will also. The good thing is they continue to work with industry, and we are trying to solve for those challenges which are very specific and unique to our country. So yeah. On that note, you also mentioned tax. So that brings me to Rajesh. While you've got a detailed slide deck, etc., but can you give us a gist of what you're seeing in terms of tax, especially in the Indian context, for digital assets?
Yeah, no, absolutely. And maybe I'll reserve more of it for this presentation later on. But we see, as Sumit mentioned, we see, at least in the Indian context, I mean, I wish we were similar to the Dubai framework, but at least in the Indian context, we see a lot of uncertainty around multiple things in terms of, there could be multiple parties involved, or it may be a new virtual digital asset or a crypto created. How would you treat the asset in your books, whether it's a part of your regular business, in which case it is business income, or is it an investment for you and capital gains? How would you compute such gains if it is capital gains? On equity and other instruments, there are elaborate provisions in the Indian tax law, but not really on cryptos and NFTs, etc. So would you apply FIFO method, LIFO method? So some of these things are kind of quite open-ended. But one thing which is obviously very clear is that the government wants to tax cryptos at the maximum extent possible without giving you a lot of other benefits on in terms of losses and stuff like that. And when the budget announcement was made to bring specific legislation around crypto, there was a lot of euphoria also saying that India is now giving a blessing to cryptos, but which may not be right. For example, in India, there are certain court rulings in India which says that even if an income is from dacoity or whatever, illegal income, under tax law it can still be taxed. Not to say that I'm kind of relating the two, but income tax is completely delineated from the regulatory provisions, and which have to be independently worked on, and that is being separately dealt by the RBI. But we'll go through some of these nuances, including GST, during my slides.
Lovely. Thank you for that. So I forgot to mention to all our viewers today one thing. So unfortunately, Andrew Horbury, who was going to join us, has not been able to make it. he caught an eye infection, and he asked to excuse himself. We will definitely have him back on the, we're creating a series of webinars, so we should have him back. For all of you guys who've come in for Andrew, you can expect to have him back on Block and Key very soon. With that out of the way, Samir, what do you see in terms of risk and compliance? There's a lot of discussions around the new kinds of risks that are now generated out of this new asset class, right? Which one time acts like a currency, can also act like a commodity. It could be a security. It could be a utility. It's transcending borders. It's peer to peer. There are no intermediaries involved. So what are some of the
Yeah.
risk and compliance related discussions that you're a part
No,
of?
so largely what risk we are seeing in the market or hearing is around one side the government has legalized the digital assets in India, right? There's a digital currency which has come up. So whether, and there are different rulings and different sayings from the tax perspective also. So that brings certain uncertainty on the path which they are getting into. And the some of the fears which we are seeing in some of the family offices discussions, that whether it's an illegal, whether it's a something which I will be later on penalized for no reasons with an investment objective in mind. And that's the larger risk which we are seeing in the mindset rather than the regulatory and the tax regime which are anyway there, because of the uncertainty in the overall regulatory landscape in India on this, as well as currently no white space kind of a global practice which is there, though there are laws which has evolved in as you mentioned in the UAE or US UK regime, but it's not, there is no white space which is a widespread acceptable practices. Each country has its own way of functioning it or regulating it, and that's where to invest, which country to invest. Those are some of the areas which we see a lot of uh, apprehensions from the family offices, obviously. And the larger part which Sumit also touched upon about the AML and the fraud part of it, because of the limited KYCs done in some of the platforms. And there these are some of the risks which largely comes to mind when one looks at it. And often there is no identifiable asset here, right? No issuer or identifiable asset as being a decentralized regime overall, and where the value is derived generally basis demand and supply. But at the same time, there are like a million, more than 5 million investors or traders in more than 20 exchanges across in India as well. So there is a swing with the upside which you have seen in Bitcoin from 5,000 to say 63,000. What we heard a week or today or day before is something very I would say very much visible to some of the younger generations, and they would definitely want to put some of the money on that side. That's what we are seeing in the market today.
Sure. I think this was a very big flavor for the last bull cycle, which happened around 2020, 21, 22, that a lot of the youngsters wanted to go. I think between that one and today, the difference is that we have a lot more institutional, interest coming in as well, right? One more thing that you mentioned, I think caught my attention. You said this is an unidentifiable asset. When you say that, what do you mean? Do you mean the owner of the
Underlying
asset?
asset, the
Oh, under.
underlying asset and
Understood.
underlying asset, right? Yeah,
Understood.
because how we have a fiat currency and or a securities or a derivative, there is
Correct.
obviously an underlying asset. Here being
Absolutely.
we see there
Absolutely.
is no underlying asset which is looked at, right? So
Absolutely, absolutely. To summarize, what you're saying is basically the regulatory clarity is also still emerging, and it's emerged in say some pockets somewhere, but it's still not there yet, and that leads family offices to believe what's going to happen. There is an uncertainty, and that says maybe tomorrow they'll come and sort of penalize uh, investments or investors who've made investments into this asset class. Very interesting. That's a very good insight. I think this underlying assets is another conversation that's been very widely discussed, right? Happy to open the floor to any of you if you have anything to say about you know uh, why is it that despite it seemingly being an asset that does not have an underlying, why would it still have value? Krishna, maybe you would want to take a stab at this.
Sure. So, Manoj, I think the way we've seen people get comfortable with crypto is that, look, most assets, there are, I would put it this way, right? If you look at an asset like gold or diamonds, they have value because other people think they have value. Intrinsically, while, for example, gold is used in industrial purposes for a very small proportion. Most of gold which is mined is used for investment purposes, right? It's, more than 50% plus of the gold in the world is used for investment purposes. But it has held value for hundreds of, years currently because of the scarcity and because everybody has decided it has value, right? It does not have an underlying cash flow. It has utility, yes, but limited utility. Now, when you look at something in the crypto space, Bitcoin, for example, right? Bitcoin does not have cash flows because it is not like owning stock in a company or owning a bond. At the same time, it is proven over the last 15 years that there is a large enough base of people who have trust on Bitcoin as a store of value. And that base of people is only increasing. And as more people get access to Bitcoin through different mechanisms, be it through exchanges, be it through ETFs, etc., that segment of people who are able to access it will only lead to higher demand for that particular asset, right? So the lack of underlying cash flow is not stopping people from using this as a store of value. And its whole concept, the reason Bitcoin has value is because enough people think of it as store of value. So there not being an underlying asset attached to Bitcoin is not stopping people from using it as a store of value. Similar to the way it didn't stop people from looking at gold or diamonds or some of these assets as store of value. That's the way our clients have gotten comfortable around this whole idea of no underlying asset. If you move across to other crypto tokens, let's say Ethereum, for example, and if you look at Ether, which is a token for the Ethereum blockchain, there the worry about underlying value is much lower because you're seeing Ethereum blockchain emerge as a smart contract platform. Ether is used as an underlying currency for that smart contract platform for people to deploy applications, to undertake various activities, etc. So there, I think people's concerns about underlying value will be somewhat lesser, but it is still a newer token than Bitcoin. But just to summarize my whole statement, I think Bitcoin has found product market fit as a store of value, and there are other stores of value also where the thesis of underlying value is very limited, and Bitcoin is similar to that.
All right. Yeah. Thank you for that, Krishna. I think this discussion, I think, will continue to debate, and it really goes all the way down to what truly value is and what money is. I think the Bitcoin has also spawned a lot of conversations around that. So that's a debate that we can continue. Having said that, coming back to family offices, Sumit and Samir, just want to pick your brains on what should be the ideal structure for family offices if they want to invest in crypto assets, right? Let's say whatever the current situation is with regulations, there are certain folks who continue to believe that this may have some value in the future, and if they may want to look at foraying into digital assets, then what is the ideal structure? We can just spend 5 minutes on that before we pass it on to
Sure.
Rajesh, and then move forward. So
So I'll share some aspects from that famous Standard Chartered wealth report that I saw and read in detail in order to understand as to why digital assets are contributing as a portfolio diversification strategy for family offices. In fact, taking a cue from a previous your previous discussion where Krishna rightly contributed, you know in fact that part is a very big aspect, that it has lower correlation in relation to the traditional assets, wherein currencies like cryptocurrencies and tokenized securities often have as in they have a very low correlation in relation to traditional assets like stocks, bonds, gold, real estate, because there is nothing underlying. So obviously it gives you freedom and it's a borderless strategy. So wherein there are periods of market volatility or economic uncertainty, digital assets may perform very differently, as we are seeing right now, and may reduce the overall portfolio risk. And there is another aspect attached to it, is hedge against inflation. Again, it needs to be tested as per a particular family office's strategy. But why, as a concept of digital assets, as in they perform in a certain way that certain cryptocurrencies like Bitcoin, which has a limited supply, so can act deflationary due to its limited supply, and may reserve as in may serve as a hedge against inflation and the currency devaluation risk. And the environment where a typical fiat currency is subject to depreciation, digital assets, due to a scarcity factor, may preserve the power in the long term for a particular family office, and obviously serve as a diversification strategy for its portfolio. Though there are regulatory issues till date, but by having a particular clear structure, say they can go for direct investments by doing good due diligence, having their own policies as to this much they will allocate, they will trade in these named currencies only, and they will not overexpose themselves, and have some experts who can manage their money. They can go for investment funds, and they can go for venture capital investments. Those who are not directly investing also, they are investing in startups who are involved in the specific technology aspects like blockchain and other related aspects attached to it, or go for specific private equity deals. It's crypto index funds as well. These are structures they can look at, or create some offshore structures in order to mitigate the regulatory risk aspect also. Over to Samir, he can share some more how they can structure it.
Thanks, Sumit.
No, no, sure. So I think these are the some structures which are prominent, and of late with this whole traded fund coming in foreign market, I think that has also picked up a lot of interest. Where instead of routing a direct investment from India to overseas, where these limits of LRS applies for individuals, one can use the same vehicle route through where the risk of direct holding those assets vis-a-vis through an intermediary fund, which is could be an ETF or any other Bitcoin fund globally, makes a lot of interest for some of the family office where they consider that as a de-risk from their strategy point of view. As Sumit just mentioned, obviously it may not be a larger part of their overall portfolio allocation, but yes, that they believe that is one of the factors they are largely looking at for considering such structures, as well as recent change in the Indian regime of the family office through this gift city, which is also picked up in last couple of months. And there is expectations in the market that there will be more guidelines around those, which will give more clarity around investments outside India, where even they are allowed to hold real estate assets or billion etc. So even this virtual currency also holding through an intermediary vehicle in a gift city is also largely looked upon by some of the family offices now. And only one thing which we are seeing is they are little cautious that they want to invest only in those exchanges or assets which are there is a certain clarity around the KYCs, or there's certain clarity around the platform workability, etc. Those are some of the areas or factors which are being considered rather than going into totally a new market or a new a deal in that sense. That those are some, I think, those are the balanced approach. I would say is more today considered by some of the offices, such that they don't expose themselves largely on these assets, which should not then impact their image, because that image is a larger challenge than the actual investment, right, at some point in time.
Of course, absolutely. I think you nailed it, Samir. I think a lot of considerations, and it makes sense to start with a smaller allocation first, and then sort of test out waters, establish those structures, whether it is out of a gift city and then to a Bitcoin ETF or whatever, right? Whatever structure that you sort of put into place, test it out, see how it goes. Invest in the right kind of assets. Make sure all of you're working with the right partners. I think that's a very key point to note, right? there is reputation also at stake. So it's very important to ensure those pieces are taken care of. With that, over to you, Rajesh. I think we heard of a lot of discussions around tax, so here's a sort of special focused presentation on tax. Rajesh, we are all yours, and you know please
Yeah,
take it from here.
yeah, no, no, absolutely. If the slides can be presented, I think that'll be great.
Sure. Team, yeah, there you go.
Okay, perfect. Thank you. I won't take much time. Obviously, there's a lot of material on the slides, which will be shared, I suppose, right? I mean, with the
Yes, we'll do
anyone
that.
who
We'll
registers.
send
Perfect,
it in a
perfect.
follow-up email. Yes.
Yeah, yeah. So I'll only touch upon certain aspects, more to give you a flavor and some questions, everyone might have. So if you move on to the first slide, yes. So, as I was saying earlier, the law from financial year 22-23, which means from April 22, is pretty clear to say that income, sorry, one slide before this, that income from transfer of any virtual digital asset, whether it is crypto or NFTs, tokens, etc., will be taxed at 30% flat plus surcharge, and will be considered as income from transfer of that asset. There will be no benefit for income tax slabs, any kind of exemptions or deductions, etc., except the cost of acquiring that VDA or virtual digital asset. This is pretty much similar to the provisions for income from any horse races, other kinds of races, crossword puzzles. And unfortunately, the government, rather than clubbing VDA income as more towards income from securities like derivative shares, has decided to treat VDA as more in the line of races and crossword puzzles, and tax them at gross basis with a completely delineated regime for VDAs. Uh, and therefore, even losses from VDA are not allowed to be offset against any income. So if I have a loss on a VDA transaction, I cannot use my normal income to offset the same. Uh, VDA is considered as a security, or a property rather than a security, and therefore any gift of a VDA will also be subject to tax in the hands of the recipient, unless the VDA is given to a relative as defined in the tax law, in which case it will not be taxable. And this taxation regime of 30% will apply irrespective of how I treat the VDA in my books. So whether I treat them as capital asset or stock in trade as part of my business, etc., the tax treatment will remain the same. If I go to the next slide, deep diving into a couple of nuances on VDA. So one thing, as was mentioned in the beginning, is about the withholding tax, which has been introduced under Section 194S, to say that any payment of consideration on transfer of a VDA to an Indian resident will be liable to a 1% withholding tax before the payment is made to the resident, and that applies to both sale of a VDA as well as exchange of a VDA. And also subject to a de minimis of 10,000 or 50,000 depending on the payer. This 1% has to be deducted by every person. So if two individuals transfer VDA from one person to the other, the 1% withholding has to be done. What happens in the case of exchange? Who is liable to VDA? Because there obviously the buyer and seller are not identified. They will be unidentified parties. Let's see that in the next slide with a couple of scenarios. Yeah. So where the payment is made to the exchange, either directly or through the broker, then this is a scenario on withholding. So I've taken two cases. One is where the crypto or the VDA is not owned by the exchange, and second is where the VDA is owned by the exchange. If the VDA is not owned by the exchange and exchange is only acting as an intermediary between the buyer and the seller, then tax will have to be withheld by the exchange when it is crediting the payment to the seller. On the other hand, if the broker is the owner and seller of the VDA, then when the exchange pays the broker, the withholding has to be done. And then when the broker sorry, in that case, broker is the seller, so there's only one time withholding. But if you go down further, then if the exchange pays the seller through a broker, then there'll be two withholding taxes. One is when the exchange pays to the broker, and when the broker pays to the seller. So the 1% has to be deducted twice in that case. And obviously, the broker, being only an intermediary, may not get a full benefit of that 1% as against the seller, and the seller will not get a benefit of the 1% withholding done on the broker, because that is done in the name of the broker. So each party will have to claim his own credit. And then if the VDA is owned by the exchange, then taxes will be deducted by the buyer or his broker. And there, an alternative has been given by the tax law to say that the exchange, being the seller, may pay its own taxes in terms of an agreement between the buyer and the seller, and the exchange will be required to disclose, in which case the buyer is not required to do the withholding. The exchange will directly pay its own taxes. If we move to the next slide, a few issues which come to us as Q&A sometimes. One is, what happens to gift cards or any credit card reward points, loyalty points, because VDA is any kind of virtual digital asset. So technically, it could apply even to non-crypto or non-NFTs. Uh, the tax board has clarified that any kind of gift cards, vouchers, credit card reward points, etc., are not VDS. So this regime, including withholding tax, will not apply to that. The second is if I'm eligible for any kind of tax deduction or a holiday under tax law. For example, there may be something on housing related or maybe investment related, social security related deductions. Then can I claim those against VD income? The answer would be yes, because the tax law only restricts me from claiming deduction while computing my VDA income, but not to deny the benefit to me to claim other kinds of exemptions or beneficial provisions. Whether the VD is a capital asset or stock in trade, it's very fact specific, and one has to look at its own uh, objective investment, how it is treated in the books, etc. And then the other issue is on cost of acquisition for any mined crypto. So there was an oral kind of a intention from the Ministry of Finance in one of the meetings to say that any kind of infra cost incurred in mining of VDA will not be allowed as a cost of acquisition, but there's nothing in the law around that. So our view is that certain kinds of mining costs, for example, if you have an asset like computers which have been used for mining, then the depreciable value of those assets for the proportionate period of mining can be claimed as cost of acquisition, and therefore you can reduce your taxable income. If we go to the next slide, a couple of more issues before I conclude with GST. One is what happens to my losses on other income and a gain on VDA. So unlike the earlier situation where I mentioned, if there's a gain on VDA and if I have other kinds of losses, then I can offset the two. That there is no restriction on that. And lastly, what happens to NRIs or foreign individuals earning any income from VDAs on Indian exchanges, etc. So here the law is not clear, and the normal law says that any foreign person is liable to tax in India only if there's a CITES or an India Connect. So whether the buyer is an Indian or if there's an Indian exchange, only then should a non-resident be liable to tax on VDA income. But here again, one can claim treaty benefits because in certain treaties like with UAE or Singapore, etc., any kind of capital gains or non-equity is exempt from tax. So we can claim treaty benefits and treat VDA income as tax exempt. If we go on to the next slide, so while the income tax law has a broad framework, as I explained earlier, but from a GST point of view, the GST authority, which is the Central Board of Indirect Tax and Customs, has still not been able to frame up its mind on how should VDAs be taxed. And some of the issues that they are grappling with, and there will be some kind of announcement soon, are these. One is on the classification of VDA, whether it should be treated as a good or a service. The second is on rate of tax. Should they apply the 18% rate, which is normally applied for service, or a 28% rate, which is the highest rate for goods? If VDAs are classified as goods, Then what will be the implication on import and export transaction? Because there's no physical movement of goods here. So will there be a customs duty, or will there be a import duty to be paid by the buyer in India, etc.? So that would be considered as part of the framework. If the BDA is considered as a service, in which case it could be a OIDR service or an online digital service, in that case, GST could be liable if it's a B2C transaction, an exchange to an individual party, then the exchange could be liable to a service tax under the OIDR regulation. And if it's a exchange of two cryptos, then whether it is considered as a supply of goods or service, again that is something which the board will look at. Last slide to me, maybe just 1 minute more before I conclude, is also a couple of indirect tax issues which we have seen. One is on the platform fee, and as you know, exchanges normally charge a platform fee for the listing and trading of VDS. So if it's a foreign exchange and the customer is in India, let's say a B2B, then the Indian customer dealing on a foreign exchange would be liable to 18% GST in the reverse charge mechanism. If it's a B2C transaction, then the foreign exchange has to register under Indian law and pay the 18% GST under OIDR, because the OIDR regulations apply to a B2C online digital transaction, including software and things like that. If the transaction is on an Indian exchange, then obviously 18% GST is to be applied by the exchange itself, whether it's a B2B or a B2C transaction. The next issue is whether exchanges qualify as e-commerce operators. Our interpretation is yes, they do qualify as e-commerce operators, in which case the exchange may be liable to pay TCS in the case of whether payment is collected by the exchange on behalf of the buyer. So that could be an additional levy on the exchange. And if it's OIDR, then obviously I have discussed this earlier. So that's the sum and substance of the direct tax and GST issues in India relating to crypto. As you can see, still some uncertainty around this, but at least I thought I'll give you a little bit of a framework. Sorry, back to you.
Sure. Thank you, Rajesh, for that. And of course, the income tax, the flat 30% income tax, that will continue to apply, right?
Yeah,
That's something that's very sort of pertinent to.
right.
All right. I think we have 5 minutes to spare. We can probably open up questions. Do we have any questions, team? Anything else you guys want to say as closing comments? I think this has been a very wholesome discussion. We went all the way from the future of crypto to trying to understand what are the current challenges, and try to sort of go detailed and into the nuances of those challenges. Um, all of this aside, the mood still seems to be very upbeat and very positive. So, any last closing comments before we move on? So, Sumit.
Yeah, I'll share something about the UAE journey that you asked me. Uh, So the UAE journey has been very interesting. Like, in spite of being primarily an oil-dependent economy, they realized that that this sector is about to explode and has a huge potential per se. So, and they realized at the very right stage and started regulating digital assets, as you rightly mentioned. And they have understood that this indeed is a part of their global innovation and technology strategy, wherein they can become a global innovation and technology hub. And their efforts in the last 2 years have clearly demonstrated that they are poised to regulate this and create a digital asset ecosystem, wherein they are creating a set of regulatory frameworks, and they are very robust as well, and on the other hand flexible also, aiming to attract global businesses whilst assuring that there is consumer protection also, there is financial stability also, and they are also ensuring that the AML and KYC part is also not uh, you know put under the carpet, while recently we can see that there is a notification that they have been put out of the gray list. So since they have been put out of the gray list, it is another welcome move that they are on the right path to create systems wherein they are regulate and put in system for all the money laundering and KYC issues, ensuring there is a financial stability in the sector of digital assets as well.
No, absolutely. So we've, that brings me to one very interesting update from Liminal. We're very close to, getting approval. We've got an in-principle approval from ADGM in Abu Dhabi for our FSP, and we're hoping very soon to get the approval for the license as well. Having gone through that process and the amount of detailing that the regulator is involved in, and the kind of things that we're looking at when it comes to AML, the kind of every wallet transaction today basically is happening on an open ledger, right? So today the intelligence has developed to a certain level, to such a level that there are these companies which are building RegTech solutions, and these RegTech solutions essentially can identify whether a transfer that's happening from your wallet to another wallet, on the blockchain network, is going to a malicious wallet, or is going to a tainted wallet, or is going to a wallet that may have indulged in any kind of money laundering activities or terrorist financing activities, right? So we are able to stop it before that transaction happens, and this is all possible because of the underlying technology, where it's decentralized, where it's transparent and open for everyone to sort of build intelligence upon, right? So once they've tagged a certain wallet, and they found it to be malicious, it comes into a sort of repository. Once that repository is shared with everybody in the ecosystem, it becomes common knowledge, and then now everyone can sort of stay away from these kind of transactions. So that intelligence is building. The amount of focus that's there on all of these aspects has been tremendous. So all right, on that note, do we okay, so there is one question. What are the key things to look for when working with third party vendors, uh, for family offices, when they're looking at vendors for working with them? So what are the key things they should be looking at? Anybody from the panel can take this. Krishna, have you I think this probably sits in your bucket. Have you faced any questions around this?
I think for the people who are in family offices looking for digital assets, right? Our recommendation has been that get the operational aspects ironed out even before you commit your first rupee to the asset class. And when I say operational aspects, it's everything right from how do you do, taxation of these assets, how do you do reporting of these assets, how will you do accounting for them, how will you do storage for them, the whole 9 yards. Before you even actually start buying these assets, you need to be very clear of who your vendors are and how you're going to enable this to happen. And when you go into the whole vendor qualification aspect of it, right, given that digital assets are such a new emerging category, the prior history as well as the crypto nativeness of the vendor becomes super important. So it is not so much about has this vendor been in business for 20 years, but does this vendor understand digital assets at a very intrinsic level? That becomes super important, I think.
Super. Yeah, I think that's a very interesting point. I mean, this is one area where the older you are, probably does not really go into your favor. The more modern you are and the more sort of technology savvy you are is probably better. Good point. All right. I think no more questions from the audience. Thank you so much for your time today. We will be reaching out to all of you with the presentation that Rajesh has put together. You will also receive a link with the recording of the webinar. And we're happy to hear from you on what topics and subjects you would like to explore further. Remember, this is a knowledge series. It's going to continue for a while, and we'll keep doing this. We will look forward to having you as part of our next sessions as well. Thank you so much, Samir, Krishna, Sumit, and Rajesh, for your lovely insights today. This was hugely beneficial. Thank you. Have a
Thank
lovely
you.
Thanks,
evening,
Anurag.
Have a good weekend.
Thanks,
Bye.
everybody.
Thank
Thank
you.
you.
Thank you.
guys. Bye.